Hello and welcome to Mortgage Watch for July 18th, bringing you mortgage and financial news. Well, it's been a wild week, quite a roller coaster ride, and I'm sure all of you have been tracking the news that's been going on regarding Fannie and Freddie Mae, the semi-government agencies that control most of the country's mortgages. There's been a lot of talk in Washington, a lot of controversy about what the government should or shouldn't do to step in and help the situation. As all of us know, it's been a worsening housing market and a worsening economic scene as all the mortgages and housing situation of the past couple of years continue to unravel. Every time everyone thinks that we've reached the worst part, it seems to get worse. Most of you, of course, again, have also tracked the fact that last week, IndyMac Bank was taken over by the feds. Interestingly enough, when the federal government steps in to take over a bank, they always do it on Friday afternoon at 5:01. So if you're in your bank at 5 o'clock and a bunch of vans pull up with government people inside, it's probably time. But there's no need to worry. I know a lot of people were freaking out and lining up to pull their deposits out. Folks, that's why we have the Federal Deposit Insurance Corporation. Everyone's deposits are insured. I know the people lining up are scared about getting their money out, but they must have been sleeping since the 1930s because there hasn't been a case of a bank that failed, that people weren't able to get their money since 1930. That's why the FDIC was created. Speaking about the FDIC and their involvement, they've taken over IndyMac Bank, they're handling all the affairs of the bank, and they're trying to get it in order so it can be sold to somebody else. This is kind of what's going on Capitol Hill as Congress, senators, congressmen, congresswomen, the government, the Secretary of the Treasury are all trying to figure out what role the government should or shouldn't have in this crisis. I know there's a lot of people think there shouldn't be a bailout, there shouldn't be any help for people, but you know, what's happening now is very obvious. We've been in this crisis for over a year. If the government had stepped in sooner and more decisively, we would have been out of this crisis probably 6 months ago. Sitting around and kind of discussing what we should and shouldn't do is really not going to resolve the issue. The government needs to take decisive action. Next week, we're going to have a special edition on the Home Loan Corporation that was formed in 1931 in the heels of the Depression. 33% of the country's mortgages were in foreclosure at that time. 15 years later, the Home Loan Corporation was dissolved at a profit to the government and resolved the whole situation. What's happening now is all this bickering and all this hand-wringing is just causing unnecessary delays and just worsening the situation. So we're calling upon all the government to get it together, come up with a decisive plan, and move forward. Now, the Secretary of the Treasury, who comes from Wall Street, is actually angling for the government to take a larger presence. So is the President. The President and the Democratic members of Congress are on one side, and the Republican members of Congress are on the other side. So when they say politics makes strange bedfellows, it sure does. For sure, this administration doesn't want to leave with one of their lasting legacies being leaving the economy in a shambles. So they're trying to do what they can to resolve the situation. And folks, you know, it always looks worse just before dawn. So when we have this kind of stuff happening, it's sure that we're near the bottom of what's going on. Fannie and Freddie, as semi-government agencies, are strong. They do have a lot of assets and liquidity, and the government of the United States is the strongest financial entity in the world. I know we tend to think that we're on the edge of a huge abyss. Our government and our financial sector are so much larger than anything else in the world that we will see ourselves through. By the way, I was interested to hear this week that the government debt of Germany as a percentage of the national product far dwarfs the United States. They are in much worse shape financially and economically than we are in the United States, but we don't tend to really hear about that. And that's because the U.S. is the largest financial engine in the world, and everyone's concerned about what goes on here. We think that positive change is coming, as we've said in the past. It takes forever in the Democratic government to get things done. But in the end, they do get done. It's just exasperating how long it takes. There is action in front of Congress. The administration has put out a proposal. They think and we think that Fannie and Freddie are going to remain strong, and we're going to see ourselves through this crisis. Interestingly enough, Americans, gas usage and oil usage has gone way down. So it's perhaps coming around that we are responding to the crisis in ways that will have positive change, not just in the housing market, but also in our general economy and economic news. Once that gets resolved, we believe that the housing market is going to be on firm footing. In some areas, it is beginning to find a bottom. In Southern California, it seems that housing prices may have indeed bottomed out and are starting to come back up. There are a lot of buyers out on the streets, and what we need now is for mortgage programs to become a little more supportive of buyers. Everyone has pulled in their horns. Fannie, Freddie, even FHA has become very, very restrictive. The mortgage insurance companies have tightened up significantly. And what we need is to get back to kind of the middle ground, not to have restrictive policies, but to have make sense policies, because if we can do that, there are buyers who've been on the sidelines for a long time, years in some cases, who are ready to buy, and hopefully we'll have the programs that will help support them. As Ben Bernanke said, our economy does face numerous difficulties, but we also have a lot of ability to fight these challenges. Regulators have stepped up plans to help banks have liquidity. When banks have liquidity, they're able to get through crises and handle stuff. It is similar to what we've been telling our listeners and viewers for many, many months. The most important thing that you can do is live within your means. Manage your debt. You just have to find where your budget is and live towards that as best you can. If we're all able to live within our means and manage our liquidity, we're going to see ourselves through this crisis and go back to better economic times. Right now, interest rates have gone down a bit this week, and we still think it's a strong time for buyers to begin to look at the market and see what's out there, because there are definitely some deals. With that, we thank you for tuning in, wish you a great week, and we'll look forward to seeing you again next week on Mortgage Watch. I'm Ilan Awerbuch with Unitrust Mortgage in San Diego. Thank you.